Hello traders, this is my weekend video. You can follow me at Gumby9662C on Twitter. And these are not trade recommendations or anything like that. Do your own Q&A. I'm not taking any responsibility, of course. Okay, let me get started. I'm just going to try to do a little overview of what's going on going into the week and kind of explain Friday's action. We had a big rally in the markets there Friday, going into the close and everything. And the main reason, Tuesday morning when we do come back, we are going to see 945 manufacturing index data. And considering Yellen's really wanting to have another rate hike, that suggests the manufacturing index data is probably going to come in strong Monday morning. And then we also saw a bid in the bonds, which is diverging that theory, Friday. So it gapped up and it kind of held that gap all day into the close Friday, and we have some bond auctions happening Friday. So depending on what happens with the PMI, we're going to see some action in the bonds too. And then the final theme that we're going to see Monday is retail, XRT, the retail sector. We've got 12 companies that are reporting retail numbers this week in 4 days, and retail is one of the few sectors that's more bearish right now versus the rest of the markets. So expectations for the PMI is going to be coming in line with January's results. Let me show you that real quick. So basically we came in line at last month's actual was actual was 55.0. And this month, for February, they're expecting 55.1. So just a very slight uptick in manufacturing index orders. So just keep that in mind. If the manufacturing index misses, the retail is probably also going to be an issue. But so we'll see what happens here going into Tuesday. As you can see, if the numbers come in strong, which I'm kind of leaning towards that we're going to have strong numbers since Yellen's wanting to raise interest rates, you see this longer term trend line, and we have room to still run on the industrials here. And even with Friday's action, we're still at the top of this yearly trend line. So Tuesday morning, depending on how those numbers come out, we are probably going to, if they come out positive, we're likely to catch a significant bid in the industrials, and we may have a very strong day. So just keep that in mind. Now, I'm a perma bear. I think the markets are nearing a very significant top here. But, markets will do what the markets will do. But at any rate, this week, like I said, we have 12 companies, big companies in retail. They're reporting this week, and and we have a bearish setup on the charts. So typically, from my experience, whenever you have a bearish setup going into the numbers, and we've had just a little bit of a pop up, and we have strong markets, this is a recipe to sell the news, in my opinion. So we'll see what happens, but just be aware that there's diverging themes going on here. It's going to be very interesting next week. Now, in the positive industrials theme, the OEX, the S&P 100, it broke out last week. Okay, it's broke out of this long-term trend line. So this is a far more bullish bias to industrials. So just keep that one in mind. There's a long-term trend line. Depending on how those numbers come out, which I'm still leaning the industrials are going to be strong, I'm thinking we're probably going to get a bid in the markets and run up to the top side of this range. Okay, another thing I wanted to mention about the RSP, the equal weight of the S&P 500, we are pushing right at the top of this trend line, trying to break out to the longer-term trend line above. And this is our breadth indicator at the S&P 500. So that's what I'm thinking, if we were to happen to get some decent retail numbers, along with industrial numbers, we could see significant breadth improvement in the markets, and possibly a really positive week this week. Now on the flip side, I had back in early January put this chart, I had talked about this chart. I had expectations of getting up to this longer term trend line and for some responsive selling possibly. Well, as of Friday, we got up right next to that long term trend line on the Qs. So it makes you really wonder if possibly that this move's already priced in on the industrials data. So that's another way of looking at the markets to be concerned about. Okay, another theme to be thinking about here. We got a lot of housing data coming out this week, okay? And we have a lot of bond auctions happening this week. So just keep all this in mind. It's very important how this housing data pans out here. Okay, the last theme I want you guys to keep on your radar, that's your energy space, XLE. Thursday, we broke down into a new bearish trend into this market, into this sector. And we do have the data coming out Wednesday and Thursday on inventories and stuff like that. So energy is not looking too healthy here. And that's one of our first indicators that the major spider ETFs are showing a little divergence to the uptrend. And when you're watching the energy sector, you need to watch the crude, and you also need to watch the gasoline price index for continued down pressure. We did catch a little bit in gasoline yesterday or Friday, so we need to actually see a breakdown in gasoline prices to really start driving this lower. An area you may want to look for opportunity, that's XLB. The past few days, this is your materials sector. If the industrials do happen to come in and beat expectations, your materials have been trading down the past few days. So there could very well be a responsive buy setup in this sector, okay? So just keep this in mind, okay? There could be a real opportunity here. One of the areas that I'm really watching here, at your SLX, that's your steel index. We've had a gap up last week, okay, and so far we haven't filled that gap. But if those industrials do happen to come in very strong, I am looking for an ultimate, the first target is around 50 on your steel index for any type of resistance. So if the industrials do take off, look at your steel index for continuation of this uptrend. So right now this week, what I'm looking at, you should potentially look for upside in industrials and materials, and you should look for downside, in my opinion, if the industrials do that, downside in your bonds and your possibly retail. So I think retail's actually short the pops, so just keep that in mind. That's all I got to say this week. I try to keep my video short and everything. I might have another video out here a little bit later, but at any rate, just be careful. We are at extreme highs in this market, and if we were to happen to miss on those industrial numbers, I can see some serious responsive profit taking here. So just keep that in mind. Thanks a lot.